gap inside of that 10 handle. If we do get outside of the 10, there's a 69% probability of filling the gap. We have a 76% probability of filling a gap on Tuesdays over the last 180 days. It increases to 79% over the last 90 days. So when we're looking at where we are in time and price in our leading indicators, the VIX ran right back up into its next measured move short. You can see here that the dollar is continuing to weaken here. So the dollar weakening gives the indices a tailwind. Again, we're getting a negative correlation back. We'll see where bank opens up here in a moment. But when we're looking at the VIX is running right up into its traditional short setup. It's halfway back short for the week. That resistance level was the 80 above us here. We came into a 2-tick front run, and that is what created the bid on the indices away from their inverse setup to this. The VIX is halfway back short for the week, and we have the indices halfway back long for the week. Now, the indices are all in varying places here, front running their support levels, with the closest inversely related to the market, to the VIX, is the YM. As you can see here, we ran right back into the YM support level and just have had this incredible rip away from support. All of the rest of the indices, they're all just responding to volatility weakness, and that's what's creating the front run. Up here at that 2-tick front run, we had the 38.2% line being front run here, and that's also the 10 handle. It's the 38. You can say here that the ES and NQ are actually very tightly correlated. What did the VIX run into? It is a 2-tick front run of its halfway back short for the week, but what is it also? It's the 38.2% line, 38.2. NQ didn't make it to the 38.2. The YM is trading its 50. The Russell was previously front run at this setup at the 38.2 and didn't quite make it into it. Now we're actually overshooting it to the upside. So we're actually on the 10 handle above. And so what we are watching for here as we're going into our morning is the VIX is running back down into its previous lows down here. And it would be very normal for it to bounce back up into the top of a range here and to fall and to create an environment here where we're falling back into the direction of the fill. The gap fill again is the 69.80.25. We would consider it filled in a front run of 2. Let's go to our cryptocurrencies here. The cryptos still have not broken their extension shorts. They're still inside of a series of short setups, but we're watching very closely since Bitcoin made a 50% retracement long from its lows, 0, to highs, 127. We're inside of a 50% retracement. And in the last crypto winter, coming out of the end of 2021, going into the beginning of 2022, when we had made that pullback, we broke an extension short, very much like the one that we're in, and we started a counter trend squeeze into an all the way halfway back short. The equivalent of that on Bitcoin would be up at 93,000. Where are we? We're in the 68s. We had 60,000 at our low down there. And so we're watching very closely the counter trend longs from lows that we have here inside of the cryptocurrencies to see if they develop into a breakout of those extensions, which leads us to that counter trend squeeze to all the way halfway back short up at 93. The crude oil chart is still sideways. There's nothing to do here. We can trade the top of the range. We can trade the bottom of the range, but we have to be very cautious of the middle. The dollar weakness trade, as you can see here, the dollar yen is collapsing. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.